Hey, good morning everyone. This is Kirk here again at Option Alpha and doing the members only video update for Monday, December 19th. So I want to go over a couple things on the charts, some things I think are really interesting and to get on your radar, I guess, as we start to close out the rest of December. It hasn't necessarily been the big Santa Claus rally that everyone expected, but then again, I've posted many times that historically December is usually pretty flat. More often than not. So I think that there are definitely some very strong reasons not to get into stocks heavily right now. I think the risk is definitely to the downside. One thing that's just odd and peculiar is that the VIX is still below 25 right now, which either one says that A, we're all stupid and the market's going to rally from here, or B, that everyone is too complacent and they're not purchasing enough risk in that they're not hedging any of their positions. So they're basically all in with little protection to the downside, which again is not very good. So as we get into these charts, as always, if you have any questions or comments, please post them to the video and trading alert update below, and then we'll go over the trading alert at the end of this video. So the one thing I wanted to just quickly mention is take a look at crude oil. This is actually, well, this is a 10-year here, but I'm just zooming in here a little bit on the crude oil chart currently. And crude has been really interesting in that it's been following these trend lines that I've drawn for really the past 2 years, maybe even 3 years. It'll start to get into 3 years now. But I think what's interesting is that we've had a very successful retracement of the breakout that happened in July and August for crude oil, is that it was following this channel. It quickly moved above the channel, traded in a next channel, and then moved below, and you can see it's just been very steady and slow. Once it made that breakout, we've retested that area as resistance now twice on the charts, and you can see it here visually that we came right up above it and right back below, and then for a couple days here in the latter half of November and the beginning of December, we tried to break above that level but just really failed. So my target for crude, if it continues to fall, is probably around 82. That's about the same type of measured move that it's continued to make a couple times before. So again, we'll just use that as a good basis here. So that should take us in through the end of December and the beginning part of January if it does continue to move lower. Who knows, right? Some of the things that you can trade off of that obviously are USO, which is there's my target for USO. Anything below 30 I think is really good on the USO, and OIH if it continues to move down as well. OIH has taken more of a beating than some of the others. If you actually take a look at the technicals, more importantly MACD, you can see that we're still clearly showing that there's some bearish movement in the market. We haven't even begun to start to turn and roll higher just yet. So it's really interesting to see, just the market dynamics for oil. For OIH, it's actually pretty impressive that, again, you had some massive bearish divergence in OIH. Going into November, it was really prevalent on USO. More importantly, that, as soon as my charts will load up here, you can see what happened with USO going into November, December, that it actually made almost even tops up here, December or November and then early part of December. And during that time period, look at how MACD had dramatically declined. I mean, just a huge decline in momentum. And so that really signaled such a huge bearish divergence, which kind of led to this move that it's continued to make. Again, it hasn't turned the corner yet. We still are pointing downward on most of the crude oil products. If we go to gold, just to review that real quick, same thing with gold. Gold has had a pretty nasty little fall here recently. Ironically enough, gold has been pretty much a loser for the past 4 or 5 months here. So what used to be a safe haven investment is now turning into a real sucker. I think gold will do a little short-term bottom here. I think that there's definitely a good area of technical resistance and support right along this trend line that it was bouncing on for October and November. So I definitely think that gold will start to find a bottom here and come back up and retest that level. I don't think that's out of the question. Gold buyers are definitely going to retest these levels and see if they're actually worth it. So that'll be the level to watch as it starts to move up. You want to watch this trend line that it's been riding on the support to see if it's going to use it as resistance going forward. Okay, so if we get back to the actual trade for today, the RUT 830, 840 call spread. The reason I decided to do a call spread is because I think that there's a lot of very key technical levels for the market to get through before it hits 830. Again, like I said in the post, the VIX below 25, which I'll show you here. The VIX below 25 really means that premiums are not swelling, that they've contracted. So for the most part, you're actually going to be in a market where even if the market moves down quickly, if we had sold put spreads, for example, even if the market moves down quickly, then if the VIX rises, then premiums could explode, not explode, but just increase dramatically. So I don't like the put spreads right now. You can really get, I don't know, the 580, 570 range to the downside. Again, I think the downside risk is much higher, and therefore it's going to be quicker to the downside. I don't think that the upside risk is that dramatic. I think that the markets could definitely rally in through the end of December if they do. You know, like I said, December has been pretty much a sucker for the markets right now, but who's to say what's going to happen at the end of the year and as we start to head into January the next year, et cetera, et cetera. But there's some very, very strong levels that the market has to get through, particularly the 775 level, 750, 800 obviously is going to be a huge level that we haven't even begun to break. And then 825 is going to be a huge level, which is right before our strike prices. So again, even if the market continues to rally, we're in a good position here that we can hedge with buying an extra call later on as premiums start to decay, that we can protect this position even if it goes against us. It's about a 14% move from where we're at right now. So again, that's a pretty strong rally in 31 days. I'd be hard pressed to see if the market can do it in the current environment. But as always, we'll just continue to monitor risk accordingly. If you go to the actual trade grid, this is where these strikes are, so 830, 840 on the January calls. You can see there's a lot of open interest for this contract, so it should be pretty easy to fill these today. As always, take your time. If you're going to leg into this, depending on your account, you can either sell a call, buy a call, or buy a call, sell a call, whatever you like to do. But we're going to target about 30 cents on premium for these. Again, like I said, very, very active. If you go to just the single legs, you can see that these are very active as well. So really tight spreads and a lot of open interest for these contracts. So it should be a pretty good fill today. I think going forward for the rest of the week, as always, going to keep things light just to see what happens. I'd rather take some put spreads on when volatility increases. So unless we get a dramatic move lower in the market, I think for now we'll just continue to pick and choose our call spread entries as we continue to go in towards January. So as always, hope you guys enjoy these videos and happy trading.